Welcome to PT Live. Capital markets all around the world are having, let's say, an interesting time at the moment. So stock exchanges have to be imaginative in how they generate revenue, etc. We have with us today Marek Dietl, who is the CEO of the Warsaw Stock Exchange, who is going to talk to us about where the Warsaw Stock Exchange fits into all this. Is it true to say that it's difficult times?
You are very kind saying it's interesting time. It's a really hard time for stock exchanges across Europe. We have a tsunami of regulations, and also the economic growth in the EU is not particularly strong, except of Poland and a few other countries. And also in general, worldwide trend is that when new companies are financed by venture capital or private equity, and only large caps are doing the IPOs. So we see decreasing number of listed companies worldwide, but we see uptake in the market capitalization of the stock of the listed companies vis-a-vis GDP. And our region, Central Eastern Europe, is not full of large companies. The only on the Fortune 500 company is Orlen. All the rest are for the world standard, or rather large mid-caps. So we have to be, as you mentioned, imaginative how to generate revenues, and we seem to be quite successful in that.
Well, you're actually coming out with a lot of initiatives. I'll ask you about those in a moment. But about the FTSE Russell, I mean, everyone knows that Poland was upgraded to developed market status, joining 25 of the biggest economies. This is 1 year on from that. Has that made a practical difference? What does that?
Yeah, there's a tremendous difference. I mean, especially for the 37 companies on our market, which are in this all-cap developed index. There was a clear increase in trading revenues, volumes, valuations, etc. So we are very pleased for those companies that their trading volumes increased, and they can really access enormous pool of capital, practically unlimited pool of capital. And the results you can see, for example, Dino is currently at in terms of market multipliers, the retail company #1 in terms of valuation worldwide, 30 plus times profit, so very high valuation, very successfully used this opportunity. And also gaming companies are valued 100 times profit, so it is
But isn't it a more competitive environment?
Yeah, it's more competitive environment on one hand. On the other hand, the funds have to allocate a given percentage of their assets into our market. So it's very good for good companies. It's not that good for less successful companies, as the emerging market funds are less picky than those developed market funds. But still in MSCI we're still developed, so they can profit from some of the funds which are benchmarking themselves to MSCI. But all in all, we are very pleased with that change. But also it requires a lot of work from our brokers and stock exchange, because they're completely new clients. The development market funds, they do not know Poland, they do not know the companies, so we are like nomads. We are traveling around the world.
Really? Is it in a way like also a good opportunity to tell new investors about Poland? Is that how it's turning out?
Yeah, usually the meetings look like this, that first we have to sell Central and Eastern Europe, explaining that it's as stable as the European Union, but also there is the positive growth rate. Then we have to focus on Poland, explain our macro story, which is excellent, and then a particular company or indexes. That's why it's very important that within the Central and Eastern Europe, a new EU member state, we cooperate very closely, because first is selling region, then the country, and then the company.
And just in a nutshell, are people surprised by Poland's story?
Yeah, especially by this almost 30 years of uninterrupted economic growth.
People don't know that?
People do not know that there's only one book, literally one book covering this period, explaining this growth phenomena. We have heard a lot about Ireland, China stories and so on, or Korea, but we have, or Japan in the 60s and 70s, but it did not make up to this academic world. But hopefully it will change, and more information, and maybe with help of Poland Today, you will forward this good gossip about this wonderful country and growth.
Yes. That's what we try to do. The Warsaw Stock Exchange, you just recently launched the 3Cs Exchanges Index. Can you tell us a little bit about it? Why was it launched? What does it do? Which countries have signed up to it?
7 countries signed up, companies from 5 countries are included, 100 plus companies, very broad index, a lot of companies. And this is basically idea, it's mainly designed for East Asia investors. Well, for Chinese investor in Hong Kong, why he or she should invest in a country like Poland, what is half of one Chinese province, 15,000 kilometers away. It's much easier for him to digest investing in companies from 5 countries with a very strong macro story. So we tried with this index to replicate the economy of the given country. So for example, in broad indexes, usually there are 3 companies from Hungary, and in our index there are 10 companies. So it's much better mirrors the economy of the Central and Eastern Europe.
How is it going so far?
Very good. There is a first product on that done by PZU as a passive fund. Of course, the index has to run for 3 months before it's used for creating a product, but we did some backward tests and so on. So we are very pleased, and we are sure by the end of the year there will be the first product, and we talk to various other investors who would like to benchmark to this index.
Okay, and what role does the Warsaw Stock Exchange play in this?
Well, we have like 50% share in the index, but actually we limited ourselves because we are by far the largest stock exchange in the region. Mm-hmm. But we said, well, let us have Poland, 50% of companies, but let other also stock exchanges to bring some companies to the table. So it's between passive index and smart beta index. So it's rather replicating the macro story than exactly the liquidity and market capitalization of the companies listed in those markets. And hopefully in the other markets the companies will develop and liquidity will develop. So the other two countries will join soon.
Okay, interesting. At the moment, my understanding is that for the GPW, the Warsaw Stock Exchange Group, technological development, innovative solutions, let's say, are very important. What are you doing? How are you putting this into action? Yeah,
well, first of all, we raised some public aid for that, more than 10 million euros from various funds, mainly from National Center for Research and Development. We also prepared our R&D center in Łódź.
So this 10 million, for example, what's that for?
New trading system. We would like, usually the trading system were developed with large exchange like Euronext, Nasdaq. We want to take an opposite approach, so medium-sized exchange, designing a system especially for small exchanges. Simply those systems from the large exchange are by far too big and too expensive for smaller exchanges, and they limit the competitive edge of the small exchanges, as the cost base is too high. I want to make it very light, very flexible, and very well customizable for different markets. So hopefully we'll have a system which will be used in some countries in the Kazakh region, Central and Eastern Europe, and also in some...
developed by you?
Yeah, developed by us in Arab countries. So it's especially designed for smaller markets.
Okay. There is a strategy called hashtag GPW2022. What is that?
Well, actually there are 20 initiatives, strategic initiatives, which should, on the one hand, deepen our existing products. So there are new indexes, like mentioned already, or new derivatives and so on and so on. Also the stock lending platform, different things related to the capital market, but also some completely new way of diversification for our business, being blockchain-based tokens exchange, or agriculture product
so
exchange.
Quite diverse.
Yeah, very much diverse. Currently, we have 26% revenue share from trading of cash equities, compared to 12% of Deutsche Börse and 14% of LSE. So still, we need some new products just to keep our business growing.
Okay, great. We've kind of run out of time, but just in a nutshell, what would you say to the man on the street or the woman on the street about why to invest in the stock exchange now, not other things? Because I know it's under pressure.
Well,
in a real nutshell.
It's the only way, democratic way to profit from the growth of the economy, and currently in the developed market situation, you're on the safe side to invest, especially the valuation are not high at the moment.
Okay. Well, thank you very much.
Thank you.